Hello, traders. It's Tuesday, the 27th of February, 2018. It's 8:02 a.m. Chicago time. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance as we come into the session here is just slightly to the downside. Allocation is to safety slightly. The only thing that two products are up on my quote page. The U.S. Treasury bond up 2 ticks. The U.S. dollar up 19.5 cents or 0.22%. The rest are all red. The product taking the biggest hit this morning is the DAX, followed by the Eurostoxx down 0.53% in the DAX, 0.4% in the Eurostoxx. Overall, though, the market hasn't really moved that much here in the U.S. We're still trading very close to where we closed yesterday, and that's basically where we stand. I want to remind you that it's best to see this broadcast in 1080p. It's being sent out in 1080p. If you have the bandwidth, you should be able to select it just to be able to see the numbers and stuff. 720p also works, but 1080 is much more crisp. Let's jump right into our review. Another thing that I found out yesterday, just reading an article, the margin debt balances, this is loans individual investors take from their brokers to maximize their portfolio returns, is at a record high, apparently. $666 billion in January. This is a very high number. This is how much money is being borrowed in order to be in the markets. The higher this number goes, the more painful the squeeze will likely be. Now, this number is from January, and it's gotta play into the correction that happened February 2nd and 5th. But something interesting to note there, the market is very leveraged as of January's numbers. Seeing some numbers. One number, consumer confidence at 10 o'clock today, but that's about it. Let's get into our review. Here's the primary expectation yesterday. Was looking for a choppy open auction out of range to drift down into the prior day's range. The prior high was 48.75 or thereabouts, 49.50, I think. 48.75 close. And the expectation is it would start to drift down to it, but I was looking for an impulse up. And a push to 70, to the 70 stock zone key area. And that's basically what happened. It was a little bit confusing at first, because we did get a quick push push up, and we started to drift down. So it looked like scenario 3 was in play, but the market failed to close that gap zone before it started to turn up. So now we're back to scenario 1, 70 extended 80. And that's basically what happened. Here's what things look like. Let me throw the stock zones. These have not really been adjusted. I haven't had to adjust these between the session before it and yesterday's session. And what we've got here is a market that turned down. It started to look like I said, scenario 3. The expectation is it would test the prior day's high at 49.50, fall through, struggle, and then continue lower, extending down to 27.30, 27.35 is the key areas below. And so it did not materialize that way. Instead, the market started to turn up. So we get this drift down. Now, this This action that we saw on the open, the 10.25 point push from 57 to 67.25, that had pretty good delta in it, volume delta in it, pretty good push there, and it seemed like a market on open OTF buy that came in and got executed. If you look at it on Bookmap, it's fairly obvious that somebody was really aggressive there, and then that order was done. And as soon as it was done, the market was allowed to drift down, and then we finally get to the real buyers down here that take it back up. We push to the 70 right here. We consolidate for a bit, and then we push to 80, consolidate, pull back, and then we end up pushing back up to 85 for the high. That's the playback yesterday. What kind of a profile, what kind of a day do we have? We have another neutral extreme day. Why? We broke the initial balance low. Then we broke the initial balance high. That puts us in neutral. And remember, neutral days are generally an indication, is a high probability indication of a reversal depending on the prior trend. The prior trend is up. We've been recovering from the correction from 3 weeks ago, and we finished with neutral extreme. This was a neutral extreme day, as I warned yesterday that we're likely to see buyers continue to step in and shorts getting squeezed out. And so neutral extreme is an extreme, as it says, an extreme indication that the market is really not interested in lower prices. So when we break lower and we just don't find any follow through, and then we start to break the initial balance high, you need to be cautious if you're shorting. Basically you don't want to short the second break of the initial balance. So if the second break is to the highs, you don't want to be short that. You don't want to be getting short. And so yesterday we had a neutral extreme close with the point of control near highs and the market closing at high. Okay, so the expectation is continuation, just like the day before. So this is another neutral extreme day. Okay, and just like the day before, we expect the market to continue to drift up. The market overall did not do much overnight. So let's, in our review here, let's take a wrong key combination. Let's take a look at the overnight session. ¿Dónde está my overnight chart? All right, looks like I closed it at some point. So let me open it real quick. I apologize for the delay. There it is. All right, strange that I closed it. So the overnight, what is it telling us? The overnight session has really good volume, almost twice as much as we would consider to be the normal, though that's shifted a little bit this month. Maybe 1.5 or 1.6 times what we've been getting. And the market tested the 87 and has been drifting and going sideways. The profile has high kurtosis, is very much in balance. And so overall, we don't have much to go on other than the fact that the market was balanced in the overnight session. So when we look at the overnight here, let me do that again. When we look at the overnight, you could see that there's a fair amount of market discovery the day before, but here there's not much going on. So we expect I'm expecting a fairly choppy open. The low is relatively weak coming in, and most of the overnight inventory is short. So that's the stance we're coming into. What does that mean for us? Okay, let's get rid of this. Bring this in. So we've moved out of balance. So we've had, just as a review, we've had these 4 days where we pop up right here, and then we go into balance. So this is a small micro composite zone right here. Okay, so we balance out, and like I mentioned yesterday, very high, pretty high volume, very balanced profile. So we expect the market to pop out, and that's why the primary hypothesis is to push higher. A lot of energy built in, and this yesterday was a dissipation day, was an imbalanced day, and so today the expectation coming in is, let's reset this. Clean that up and put on the stock zones. All right. So today coming in, I expect it to be fairly noisy opening. I expect two-way action. The market is likely to test lower. I'm looking for it to grind its way up to the overnight high and then consolidate. I don't expect much range today. I'm expecting about 12 points of range, 12 to 14 points of range. Really not very much to push us around. I don't see any numbers on the chart. On the economic figures on the calendar, I'm not expecting something crazy to happen today. On the extreme, it might push into this 27.94 stock zone. And potentially to 2,800 to the upside if it does maintain a strong bid. But that's about 25 points away. Not expecting that much range. I expect it to just chop around. On the secondary, if we do get a quick pop over, I expect it to push through, come back, come into the range, consolidate, and then drift upwards later in the session. Okay, why would I think that it would drift upwards later in the session? The reason is that we failed to fill in this gap zone. So we've left the gap zone behind. When I pull in the flex levels, you can see that gap zone 226. And we have taken back basically the entire sell-off day. We're above the high of the sell-off day, which was at 27.63 or so. And so really there's nothing here that says that sellers are participating and are able to hold territory. So I'm expecting the market to continuously push to the high side because that's the side with the least resistance, in my opinion. The easiest flow is to the long side. So on this, I'm looking for it to push back down. The potential is that it might push to 2770 before it pops. I do not expect a sell-off day, but that's scenario number 3. Be open to it. Really, it's about watching whatever it is you watch to execute off of, right? But these stock zones are telling me what I should be aiming for. We've run through them a bit, but you could see from yesterday. Let me clean this up, change the color here for a minute. You could see from yesterday, it's, the market's kind of doing its thing. It's chopping around the areas that I expect it to. Point of control yesterday was right at 80. 80, if you recall from yesterday, was the single print TPO and an old balance area, 2780. We balanced right there, and then we put in the point of control right on 2780, and then we continue to push to 2785. So they're pretty much hitting right on. And there's no magic here, folks. This is not secret sauce or anything. This is the stock zones are built on just simply what the market has done in the past, combined with a little bit of statistics, just some extensions, things like that. And that's basically what I'm looking. If the market's trading in here, I'm not doing anything. It just keeps me out of trouble, and it gives me purpose in a way to act. So if it's in my stock zone and it's setting up properly on Bookmap, then I take the trade. If not, I'm not going to trade in between. And when I'm in, it gives me the next potential area. I still scale out, but it gives me the next potential area to test if the trend continues. That's all I have for you. Good luck today. Take care.